Joining us to discuss the issue of China's debt levels is Jack Perkowski. He spent many years doing business in China and is managing partner of JFP Holdings. Welcome, Jack.
Thank you very much, Rachelle. Nice to talk to you.
So, looking at China's current debt issue, including local, government, corporate and household debt, how serious is this and what's the economic impact?
Well, I think that when you look at China's debt and compare it to other countries, what you need to understand is the composition of China's debt is substantially different. In most other countries, the government debt is very high, and also household debt is very high. In China, actually, the central government debt is very low. Local government debt is higher, obviously, but household debt is low. The real issue is the corporate debt. The corporate debt in China is about 18 trillion, the equivalent of $18 trillion. And about 70% of that is held by state-owned enterprises. So basically, at the root of the problem is the fact that the state-owned enterprises, which are fundamentally less profitable than the private companies, get the lion's share of the debt. And that's really the issue.
Now, in terms of other risks, there also remain challenges in overcapacity, zombie companies, shadow banking, and keeping property markets stable. What's the strategy for addressing these risks?
Well, it has to be kind of a multi-pronged strategy. Number one, I think some of the companies and some of the debts just have to be written off, or the companies have to go bankrupt, which obviously is a difficult thing. In other cases, China owns, for the most part, the large state-owned banks, so therefore they, they can be encouraged to, restructure those loans or to forgive those loans in some, fashion, or to accept equity. I think that reforms in the stock market are needed so that equity plays a much bigger role in financing companies than debt. So there are a lot of different measures, that need to be taken. There's not really one thing that China can do to solve the problem. It's really going to have to be a multifaceted approach.
And what sort of efforts have we seen so far on the part of the government to really try and stave off these systemic risks?
Well, China is starting to close down overcapacity, and that's a real issue. I mean, China today has over 50% of the world's capacity in steel, and the same in aluminum, and that's now causing, problems on the trade front, as we've seen in recent days. So China has started to force companies to reduce overcapacity and so forth, but there's a long way to go. What I always say, in China, there's no such thing as a small problem or a small opportunity. There are only big problems and big opportunities, and that's because of the sheer size of the country and its population.
Now, in terms of any new or additional measures that you expect to be taken on this year to really try and rein in some of these financial risks we're seeing in China, what do you think they might be?
Well, I think that, China will continue to monitor very closely the outflow of capital. And basically in 2017, China really made it very, very difficult for Chinese companies to expand overseas and to exchange RMB to hard currencies. And I suspect that that's part of the reason why you've seen these underground banks come up and, finding innovative ways for companies to get, currency overseas to basically expand globally. Now, they've eased up a bit, but I think you can expect to continue to see, China being very vigilant in monitoring large outflows, the large commitments of capital to the purchase of assets outside of China.
Now, what about these very popular social networking apps like WeChat or other mobile apps offering financial services and platforms? How is that affecting the overall health of China's financial system?
Well, basically, I mean, the regulators in any country try to control all the financial transactions in one way or another, because that's the way they have ultimate control of the economy and have the ability to finance it. When you have outlets like WeChat and other social media, what happens is that you basically have, an explosion of kind of new devices, new ways for people to communicate, new ways for companies to finance, or entrepreneurs to finance their new business, and so forth. So what it does is it proliferates the ways in which, money can get invested, or lent, and that makes the job of the regulator, not just in China, but really in any country, more difficult.